Okay, hi everybody, this is Mr. Manning, and this is going to be a video about how to post transactions from special journals into the general ledger. So, a couple of quick reminders. Hopefully you have already watched the videos about how to use special journals and create subsidiary ledgers. If you haven't, you might want to go back and watch those first. But when a corporation does their step 2 of the accounting process, whenever they take transactions from the special journals and put them into ledgers, sometimes they use subsidiary ledgers for very specific transactions like accounts receivable and accounts payable, but other times they want to just put the transactions into the general ledger. So we're going to talk a little bit about how they do that. So what I have created is a slides presentation that has 5 big questions. And to follow along, you may also want to have this Google Doc, and you can answer these questions as I go through them in the video. Okay, so what is exactly a general ledger? So this is a ledger that has all of the business's accounts. Remember, subsidiary ledgers only had specific accounts, like accounts payable and accounts receivable. The general ledger has all of the business's accounts. So this would be things like cash and supplies and the capital account and all of the expense accounts and sales and so on. So think about the ledgers that we used whenever we did transactions for small businesses. That was a general ledger because it was a ledger that had all of the business's accounts. So corporations use these things too. Speaking of, have we ever used a general ledger? And the answer is yes. We did this in first semester whenever we were working with small businesses. So when is the general ledger prepared? Corporations usually only prepare their general ledger at the end of the month. And the reason this is because unlike small businesses, the corporations are not nearly as concerned about keeping track of the balance of each individual account. So a small business would probably be concerned about how much cash they had at any given time, or the amount of supplies they had, or what the owner's equity capital account was worth. They would care about that stuff throughout the entire month. But a corporation, because they have so many transactions and they are so much larger, they don't feel like it's necessary to keep track of those accounts all the time or daily. So instead, the accountant for a corporation would prepare the general ledger usually at the end of the month. And when we talk about how they do this, well, that'll be the next question. So how is it different? So in first semester, we looked at just the general journal because that was the only journal that small businesses used. But as you guys now know, corporations use special journals. In fact, we have discussed 5 of them. So this would be the purchases journal, the sales journal, the cash receipts, the cash payments, and their own general journal. But in first semester, we went through every single transaction line by line by line, and we recorded that amount into the general ledger. Corporations don't do that. Instead, they take those special journals, and after they have done the subsidiary accounts or ledgers, they then take the individual columns in the special journals and they total them up to get one single number. And then that one single number is what they put into the general ledger. And as it says here, this is a huge time saver, which corporations have to look for ways to save time. They have so many transactions, it would be impossible for them to go line by line by line like a small business and put all of the transactions in individually. So we just said that the accountant will take transactions from the special journals, they will total the columns up, and then they will take those numbers and they'll put them into the general ledger. Is there a certain order that they must follow? And the answer is yes, there is. The reason this is necessary is if you don't follow this order, you might end up getting balances in accounts that are unnatural. And here's what I mean by that. So we all know that the cash account is an asset account, and asset accounts have debit balances usually. If you did not follow the order that is listed here, then you might end up getting, in your cash account, you might end up getting a credit balance. Now, that doesn't seem like it would be a huge deal, but accountants take this stuff pretty seriously, and they want to make sure that the accounts stay in the normal balance. So if you follow this method, if you do the sales journal first, then purchases, then general journal, then cash receipts, then cash payments, if you do them in this order, your accounts will remain in their normal balances. Okay, so that's just kind of a quick overview of general ledgers and how accountants deal with them for corporations. In the next video, we are going to actually prepare a general ledger together.